Mr. Klasen, tell us about the new relationship formed between ATI, PwC and Euler Hermes.
International trade contributes considerably to the sustainable development of the global economy, and export credit agencies play a crucial role in strengthening the national economy. The partnership and the agreement we signed today between the German ECA, Euler Hermes-PwC and ATI will strengthen trade ties between Africa and Germany and open new markets for both countries or regions.
All right, now the credit facility that's been established, which is one instrument, is actually designed to manage financial risks that are incurred by vendors within the trading system between Germany and Africa. How does it work exactly? And I'm talking here the risk management facilities, the trade insurance, the export credit, all the things that traders need to just facilitate entry into European markets.
And the products and services we can do will really fit together. So there are two important points. We will fill in information gaps, so we will share information on credits, on risk for joint transactions and open and enable new transactions. But we will also share risk, and this will be the most substantial part of the agreement. So we are able now to do co-insurance, reinsurance, parallel insurance, both for African companies and also for German exporters and investors going to Africa.
The material benefits, because often the criticism is when we enter into these so-called resource sharing agreements, it's usually the larger trading partner who benefits the most because you've got a lot more to export to Africa.
I think both parties will benefit of the agreement. Germany is an important trade partner for many African countries, for many African companies, and ATI will be able to share the information, get better information on buyers in Germany. And we've seen a lot of examples today when we discussed together how ATI, how African companies will benefit. But of course, the German companies will benefit as well. The figure is maybe regarding the percentage of exports we do to, let's give the example, sub-Saharan Africa, quite low, only 1%, but the figure itself, around 20 billion US dollars we did last year on exports, is quite high. And the German ECA covers a substantial part. In this year, for example, around 600 million US dollars we covered for exports to Africa, and it's something I truly believe both parties always benefit from.
A big issue for Africa is we need to stop being exporters of raw materials to developed economies and start introducing beneficiation. Now, one of the things that we could gain from the Germans is expertise in engineering services, for instance, technology transfers. What's being done about those kinds of elements? Because we need to boost local manufacturing capacity. So what's being done about skills sharing, skills transfer, technological transfers, those sorts of things?
Germany has a broad industry base. Manufacturing, you already mentioned that one, is an important industry sector in Germany, but there's also chemicals, for example, infrastructure things we can do. And an ECA, an export credit agency, has not only the role to support specific transactions, maybe with better credit terms or just the capacity. It's always a goal to do technology transfer. And if we have a look at recent projects and also at current projects, we see that it really works, that the German exporter does something which enables African companies, African countries to do and bring something new into the market. And we always try to combine that one with foreign direct investments. So the German ECA does not only cover the export side, we always try to do the foreign direct investment agency side as well. So to bring something new into the market, not only for Germans, also for the African companies.
Now, obviously, ATI has also been expanding its reach beyond Kenya, going into markets like Malawi, Madagascar, Zambia, Uganda. If you just looked at the profile of some of these, they're mainly minerals and resource-rich countries. And that speaks to what it is that Germany is looking for in Africa and vice versa. Doesn't seem to be a very different model to some of our other new trading partners, the ones that are just looking to really capitalize on the resources that exist in Africa. Or is that a wrong perception?
Resource scarcity is an important topic for Germany as well, so you're absolutely right. However, due to the diverse structure, the industry structure in Germany, it's not our goal to concentrate on countries or buyers who have specific interest in resources. So when we have a look at the projects, what we covered, it's aircraft, it's infrastructure, it's healthcare, but it's also telecommunications and a lot of other things. So I wouldn't say that it's really a part of a so-called resource strategy in Germany. If it fits together, well done. We have seen a project in Mauritania, for example, where we combined the instrument of the official export credit insurance together with a so-called untied loan scheme for resources. But that's sometimes an exception, I would say, and it's not the same goal as other countries have. We are really concentrating on the manufacturing side, on the telecom side, and a diverse business sector.